If I added a little bit here and I think it must hold the opening range minute and I see buying again, then I may add, a few extra contracts here again. I have like 4 rules in my trading. And the first rule I have is I thought I had, I found an infinite money glitch basically. I kid you not, 12, 14 hours every single day, whether it be staring at the charts in the morning and then watching other traders in the evening.
Would you ever move your stop loss to like break even, or would you like trail it up?
So most of the time I let my positions.
Welcome back, everyone. Today on Process Over Profits, I'm joined by Yaseen, an order flow trader with over 6 years in the game. And today we're going to dive into his process, his mindset, and his strategy to see what 6 years of experience has really taught him about trading. So Yaseen, welcome on the show, man.
Hey, thanks for having me. My name is Yaseen. I've been trading stocks, options, futures for a pretty long time now, almost going on 6 years. It's going to be my 6th year this year. I started with stocks. I started with penny stocks, and then I used some of the profits to go into options. And I got really lucky in the 2021 bull market. I made a bunch of profits. And then, 2022 came, 2023 came. I didn't have the risk management down. I didn't have the discipline down. I was just kind of getting lucky in 2021. And then I blew lots of my profits, and then I ended up owing a lot of taxes. It was a very messy situation. And then I got back into options and just basic stocks, and the VIX was really high. And what I noticed was I was mainly trading the indices, so QQQ, SPY, SPX, whatever. And what happened was most of the time I'd be able to get the moves right, but I wasn't getting paid. Either because the timing was right, or I'd be holding for too long, theta decay, or 1 day expiries. So I tried looking for a different way to make money while still being right. And the only other option was either shares or futures, where you're just getting paid on the delta. And there's no time decay basically. And for shares, it would cost a lot of money you needed to put up a lot of capital up there to make a decent return. So I found out futures. And the specific thing that helped me with futures is with stocks, you have many different exchanges where you're getting the data from. You have a few different exchanges. So the order flow is very separated. It's very hard it's not concise. But with futures, it's one single exchange where you're getting the orders from. So it's very easy for me. It's a lot easier than stocks to identify where, there may be trapped sellers or trapped buyers, or it's a lot easier the data is basically just in one stream instead of 4 or 5 different data exchanges coming all at different times and different speeds. And then I've stayed with futures, and that's where I've seen most of my success. And I just funnel some of my futures profits into long-term stocks, so that way it's a little bit more balanced.
Awesome. So would you say so what's your bread and butter then when it comes to futures? Like when you're trading futures, what are you trading specifically?
I mainly trade the NASDAQ just because it's the most volatile, but I have dabbled into some ES and gold. Gold recently just because of the volatility, but
Yeah.
ES it's been crazy lately. But the S&P 500 futures are just not for me. They're a bit slow, even though they provide really good opportunities. I know many successful traders that trade the S&P 500, but the thing with NASDAQ futures that I feel like gives me a little bit of the edge is that it's a little bit less liquid. So if there's a bigger participant on the NASDAQ futures, I'm able to spot them, a lot quicker than, let's say, on the ES futures. The ES futures are a lot more liquid. There's way more size being traded. They're the most liquid futures out there, actually, compared to the NASDAQ, where it's a little bit less liquid. The book is thinner. The ask is less. The bid is less. So if there's a big buyer or seller on either side, I'm able to spot them quicker, and they're able to move the market a little bit faster. So I've stuck with the NASDAQ futures, and that's where I've seen most of my success.
Awesome. And just coming back to kind of going back to the start of your journey, you mentioned some really interesting points in there. And I think one of the specific things where you said about how you made a bunch of profits and then all of a sudden lost it all, and then you had the tax bill.
Yeah.
Do you mind speaking about that for a second? Because I feel almost no traders in the space, unless you've really been through it, haven't any idea. So I feel that could be quite interesting.
Yeah. So in 2021, I started in 2020, or I think early 2020, whatever. I started with a few Tesla shares, and it was right when it was getting split. And I started getting to penny stocks. Penny stocks were really hot because that's when the stimulus checks were coming in. There would be, hundreds and thousands of percent gainers every day. And then when I got into options, I would literally just swing stuff. That's when I got introduced to unusual whales with the whole flow thing, and I would follow a bunch of it, and I'd just get really lucky. I'd wake up to gap ups every day, to Chinese stocks gapping up 4, 5, 10%, and I just get really lucky consistently. And I just kept on trading, and the end of the year came, and I kept on going and going and going, and I didn't aside any money for taxes. And when it came to time to pay the bill, I lost a lot of it. I was going on vacations, I was spending, I started losing. I thought, oh my God, it takes 5 years to figure this out. I have it figured out in literally a year, not even a year, in 6, 7, 8 months. So that's when I started like trading with more size. I'd get into really big positions. And that's when I would be like, oh my God, I'd swing and it would gap down. I'd swing and it would just not work. And I was like, and then
Yeah, yeah,
I was spending a lot of it. I was going for cars, dinners, traveling, just like splurging. I thought I had, I found an infinite money glitch basically.
yeah, yeah,
And it was early in my college career, so I obviously wanted to look good and everything. And the tax bill came and I was like, oh my God, like I'm screwed. So I had to kind of build it all back up slowly. And that's when I realized like they're a hard thing to come by, and we must preserve it when they do come. So you put this for long term, put this for taxes, put this in your whatever long term investing you have. Kind of divide it so you don't fuck yourself over at the end, because when it all comes on crashing, it all comes on crashing really quickly, and you just end up regretting all the spending or all the losses at the end.
And was there a point during that process where you were like you almost quit, or like was it always just like, nah,
Oh,
like this
yeah.
this this is
No,
gonna work?
many times. So I've always been really delusional about it from the start that it was going to work. I've always had the idea in my head that if I really put my mind into something, that I'm gonna make it work. And I was spending literally, I kid you not, 12, 14 hours every single day, whether it'd be staring at the charts in the morning and then watching other traders in the evening, whatever, and then charting later at night, and then just figuring out what I was doing wrong. There's two really good traders that I really look up to at the time. One of them is Ripster. I don't know
Mhm.
if I'm sure many people are familiar with them. Another person was Elite Options. I learned
Yeah,
from
yeah,
him a little bit about momentum and stuff. And then I learned a lot also from Omar Ashraf about just his supply and demand, whatever. And those are like the main three people I kind of, I wouldn't say like fully learned from. I feel like I mostly self-learned because I would just be on the charts all day. Like I didn't buy anybody's course or mentorship, anything like that. But um, there are many times where I quit, where I would just size really heavily and it would all come crashing down and be like, okay, this is just not for me. I can't do it. I
yeah,
don't know how people could do it every single day. And I have literally pictures of me crying. And I took them with the sole purpose. I was so delusional. I took the pictures of me crying because I figured out later down the line, I knew that it would kind of work out. It couldn't have worked out. Like, it could have not worked out. And I would just been like a dumb idiot, that just took pictures of myself crying. But I've always had the idea that it was going to work out as long as I knew what I was doing wrong and I just had to fix it. I feel like every trader
yeah,
knows what they do wrong, whether it's oversizing, it's discipline, over trading. Like everyone knows deep down what they do wrong, but it's hard to actually go in and fix it.
yeah,
And when I found out what I do wrong, which was basically oversizing, revenge trading, and literally just like chasing momentum plays, whatever, I was like, okay, like if I really want a shot at this and I really want to become like these people that are succeeding, you have to fix whatever you're messing up on. And that was kind of always a delusion in my head.
your issues were obviously oversizing, chasing momentum, and that kind of thing. Like,
Yeah,
I feel like a lot of traders struggle with those things, and like they
yeah,
go about this for like years. Like they go 3, 4, 5 years, even some people, and they just can't seem
yeah.
to fix it. What advice could you give to someone in that position? Like, how did you fix it?
The first thing with oversizing, I figured out how much to risk basically every day. So I basically wanted to survive for at least, a month or 2 months of straight losing every day. So I figured, okay, if my account, let's say, is $100,000 and I lose on average, and there's 20 trading days in a month, and I want to be able to lose for 2, 3 months straight in a row, I can't lose this much per day. And if I'm gonna take 4 trades per day, then I can't lose this much more per trade. And I would just try to avoid any setups that were basically less than 1-to-1 risk reward. I try to always go for 2 or above, just because if my win rate, let's say, is 50% and I break even, then I basically just lost on commission. I lost mentally. So I tried to always win a little bit bigger than I lost. So I just started small. I didn't care about how much I win. I just wanted to prove to myself that I could have winning trades.
Yeah,
And when I started winning slowly, I just wanted to prove the concept that winning is possible in this game, whether it was big or small. I wanted to prove to myself that, I could put it on a trade, I could put stop, put the target, and just watch it work out. And over time, the results would be in my favor. And that's kind of what I wanted to prove to myself, kind of in the middle when I started blowing up and losing a lot of money. And when I realized that, hey, I could be profitable, making $1,000 a month with this much size, with this much risk, I could, scale it to 2, 3, 4, 5, 10. Most people don't realize it's the same setup that makes you $500. It's the same setup that makes you 5 grand. It's the same setup that makes you 50. It could be the same setup that makes you 500. Probably not 5 million because there's liquidity problems, but you just have to prove the concept to yourself that you can trade profitably. And I just sized small until I saw the results were in my favor. And then over time, I was like, okay, like I know I could do $200 a day. Like, can I try to push it to 500? and I was stuck at $500 for a really long time. And I was like, okay, let me try to push a little bit more. I got spanked right as I sized up, and
Always
I
the
had
way.
to size. Yeah, I had to size back down. I was like, okay, like I kind of know what I'm doing. I know I can make a little bit more. You know, time to make just a time to size up. Just play with two more micros, two more minis, whatever. And it just kept on scaling and scaling and scaling. And I'm at a point where I'm stuck at a certain number right now because every time I size up, I'm emotionally not there to put on more risk, but I'm
Yeah.
content kind of where I'm at. So
I think what a lot of people will be really interested in to see, because you've already, kind of broke it down a little bit, is like, what is your strategy? What is your process? Like, how are you
sure,
actually approaching the markets on a day to day? Can you
sure,
break that down for
yeah,
us?
yeah, absolutely. I trade mainly support and resistance with a bit of touch of order flow. Main thing I trade is support resistance, or you could call them supply and demand, whatever it is. I trade with purely some zones on the chart, and I mark them with key levels like previous day high, previous day low, weekly open. And I have the opening range on my chart as well, but I don't trade the opening range as much as people think. It's not like if it breaks the opening range high, I take a long. It's not like that. It's more of if I know the trend is up and it broke the opening range high, then I'll take an opening range high retest, for example, and
Mhm.
I'll ride the trend up. Or if it's flushing down off the open and it breaks the opening range low, then I'll wait for a retest to the opening range low and then just take it back down.
Yeah.
So I mainly trade based off support resistance. That's my main bread and butter. And retests, breakout retests are, the most successful setups I usually have. This is an example of a breakout retest. I'm pretty sure this was near the opening range low, and this was a key breakout area of last time. And we come back to it, and we are starting to reject it. And so I consider this a breakout to the downside. I take the retest and I just target the next pivot down, which is just a random extension level I had, which is the opening. It's a extension of the opening range. You know how we saw here, we saw an impulsive buyer here where we went up really quickly. So at the same exact time when we're reversing back down, I'd expect to see the same action. But since we started wicking up near the, which is a key level near the weekly open, and we started wicking near the previous support level, then I take a short with a stop like right above these wicks right here. So I take a short somewhere here, and I just target the next level down. That's kind of a setup I have, which is called support and resistance flip, where a support becomes resistance and a resistance becomes support. There's another example where I take it here, where we also had another great support level here at the weekly open. It's the same setup actually. It's the same
Mhm.
trade, but this is just like a bigger view of it, right? Where we know the market was going down, it failed to break up higher, and it came back down where we'd expect a bounce right here because this is where we bounced last time. We could see it was trying to bounce near the 90 area, and we reject it. And you obviously try to short this with a stop a little bit above here and to go down. And the key thing to notice here is that momentum here was extremely fast. So we tried to dump really quickly with a strong candle move down, and we just instantly reversed all the way back up almost 100 plus points, right? But when we come down here, we're not seeing that same type of reaction anymore. It's a lot slower, and we're rejecting where we bounced last time. That to me is a clear buying selling shift where you just take it short. Basically, all the buyers that bought here are basically trapped now and they gotta sell. And I mean
Mhm.
that's just how I think. Not that the market works like that, but that's just how I think. And it kind of goes down. Um Kind of the same example here, right, where we had the opening range low where it keeps bouncing, but it kind of just starts rejecting again. So support basically becomes resistance, and it ends up flushing really quickly.
And
It
obviously, I can see there, like, you've obviously got the footprint charts, obviously, on the
Yeah,
chart
yeah.
itself.
I
Like,
will.
how do you
Yeah,
use that in correlation to this? So, like, let's say,
sure.
like, step one is like you find like your overall trade idea, which be your area of support and resistance. Then what?
Yes, I will get into that. That's kind of like down the line. So let
Okay, all
me.
right, yeah, yeah, yeah.
I'll get to that in a
I
bit.
get
Yeah,
you.
yeah. But this is what I call the delta. It's the leg to leg delta, basically, where I see the technically buyers or sellers per price on right here. I will get to that in a second. But
Okay,
the main
awesome.
thing first is plotting the levels first. This is another example of a resistance to support flip, right? We see resistance, resistance, resistance. We get a breakout, and this is just a breakout retest where this is a trade I took a while ago. This was when NQ was 21,000. I just put up some examples earlier this morning, and you basically just now become support because of all the resistance times, and I end up selling near the previous highs, and it ends up keep going up towards the overnight high. So the main idea is resistance just becomes support. Once it breaks out, the main idea is resistance becomes support and
Yeah.
support becomes resistance. There's one more example. I believe, where it was resistance down here. It kept struggling. We ended up breaking out. We ran into some random resistance level at 25,000 flat. It ends up coming back and it starts wicking down near the previous resistance area, the old resistance area where we broke out. And then once I know that it was holding the area, I took it long with a stop under here and I targeted the last resistance. So
I'm
this is
curious, what kind of like time frames are like these trades mostly?
sure. Yeah, this is the 1 minute time frame, but I'm also watching the 5 minute and the 10 minute on tiny chart. The one
Okay,
minute kind
awesome.
of helps me find the entries where like I could try to get the wicks, and then the 5 and the 10 minute kind of give me the bias of where to not go long or where to not go short. Where, for example, if the 5 minute is showing lots of wicks in the area here, I'm obviously not going to go long and going to wait for a pullback to where maybe there was lower wicks down in this area or upper wicks down in this area where it could be lower wicks down there.
Okay,
Um,
cool.
and basically, this is like a little diagram I draw where if I'm trying to go long for a support resistance flip, we have a resistance, it breaks out, it comes back for a retest, you take it long. Same thing for the short. It's kind of balancing. It comes back, it fails, and we go lower. This, if you notice, this is the exact same setup that we had earlier, for example, right here, where
Yeah.
we kind of broke down, rejected, and we came down. Um, Let me get into another thing I have, which is a bullish change, for example, where we're coming down from. This is like another technique I have where this is to catch the reversal, basically, where we're coming down pretty aggressively, and then we get met into a big bottom area where we see the market tries to bounce off of it pretty strongly, right? What I'll try to do is I will not try to catch the bottom, but once the market starts to make a higher low, then I will try to, go for the full reversal back up to the highs. So it's kind of like a little V, right? Where
Gotcha, gotcha.
we made the double bottom here, and then this is kind of when we figured out that the structure changed. When it broke that last high here, and I tried to go for the, we see wick all the way down here at 950. So I take it with a stop under the structure change down here where you see all these little wicks right here, support, support,
Yeah,
support, all this little area. So I take it long right there with a stop right under, which is like 20 points, give or take. And then I target the next resistance, which is 23,000 flat, where we sold off from right here. So that's kind of called a support reclaim or a bullish structure shift, however you want to call it. We get the same setup here again. We're coming down, we get the same double bottom type, and then we end up breaking structure here. And then you kind of take it long anywhere from 53.60 to 53.65 and just target the next resistance. It ended up breaking out, but obviously you wouldn't target all the way back up there. But this is kind of the idea where it goes down, it forms some type of double bottom. It forms a big, base down there, and we end up breaking the high of the double bottom, and we end up turning resistance into support. It's always the same idea. The resistance becomes support. You long it with a stop below the shift right here. So you see all these wicks right here, the
yeah.
same area right here. You take it somewhere between 53.60, 65, and then you target next resistance, for example, at 53.80. Or you could leave runners depending on your size.
Okay,
Um,
awesome.
I took this on actually on a stock trade recently. It was on CRCL, and it's literally the same idea, right? Where we ended up going down, we ended up reclaiming the support. So you see resistance right here. It became
Yeah.
support. I longed it with a stop at the low, basically right under 127, and then you just target the next resistance, which is what basically the previous close down here.
And for you in these cases, is it always the wicks that are support and resistance?
Yes. So wicks are basically showing to me where buyers or sellers reacted really impulsively because what the wick is telling us is that the price went there, but it didn't like it and it came back down. And the only reason why it wouldn't like it if there was a stronger participant there in the area. Otherwise, we would just be way past it and the body would be covering the area. Does that
Yeah,
make
makes
sense?
sense. Yeah, perfect.
So that's why the wick is like a little bit. It plays a little bit more importance to me because that it shows to me where the stronger buyer or seller was at. We get the same thing here, right? We go all the way down. We form the double bottom. We break over that high over here, and you just take it in the same exact area. Resistance becomes support, and then you can target the next resistance, or you could target the one above, depending on the range of the day, for example. Right? And here I could start getting into some of the delta stuff, right?
Okay.
But this was kind of basically the idea of a bullish change where we go down, we form a double bottom, we break the high, and then we retest the previous resistance of the double bottom, and we take it and we try to aim for the previous resistance level of up top.
Yeah. Yeah, it's very clear. Obviously, the break and reclaim with the support and resistance. It's
Yeah.
actually quite refreshing to see, to be honest.
Yeah, I mean, I make it very simple. So like there's not really many indicators or anything on the chart. I actually have none. I only have just the volume profile where, for example, like you see that it's kind of a lower volume node down here where it shows me that not many transactions took place, but I will also get into that later. And it just shows me that there's more aggressive participants in the area where they just buy it really quickly. It gives no time for people to transact. And it's basically it just what a low volume node tells me is that this price is unfair, and if I'm going up and I know it's unfair, it basically tells me that it's cheap, and that's
Yeah.
when I buy it. And then the same thing for the failed. We have the resistance, we go up, we fail really quickly, and basically the same resistance becomes the same resistance, and you end up taking it low. It's kind of always the same thing. We break up, we see aggressive selling. You can tell by the candles how aggressive they move. Same resistance, so it was support here, it was kind of support here, becomes resistance here, and then you target next area where you see all this levels right here, and that's basically where I take my profit all the way where it used to previously bounce.
Do you have any filters for this, like that might make you think, even though, like, say for example, this break and retest set does obviously occur, or like this
Yeah.
break and sort of reclaim sort of situation, do you have any filters that make you think like maybe I should stay out of this one, maybe this isn't a good trade?
Yeah, absolutely. Yeah. So the time it's spending in the area. So the more time spent in the area, the better, because it shows that, for example, if we're in an uptrend and it's spending lots of times not being able to break up, then that's a good sign. So time spent in the area, I won't take it if it's just a 1 or 2 minute candle. Like I'd like to see plenty of time spent in the area to show me that, hey, we're not able to get above this. We're not able to get below this, and then that's when I take it with confidence with a proper stop above. And then I guess confirmation. I hate to say it's confirmation because, in my perspective at least, I don't think there is anything confirmation in trading. You kind of either it's because some things happen really quickly. But it would be the delta. It would be the delta on the side, the delta profile on the side. That would be kind of my confirmation, I guess. But I will get into that right after this. Then that's another example of like a failed breakout. So this is the opposite of a reclaim, where we're not able to reclaim the previous highs. So you end up shorting it with a stop at the previous high, and then you end up taking profit at the bottom. And that's kind of the visual I drew, where we're kind of going up, we make an impulsive high where it's really aggressive, but we fail. We end up stalling, and you could take it short here with a stop at the high and, basically target like a full U reversal.
And all of this is normally like on between the 1 and 10 minute time frame, yeah?
Yeah, it's all on the 1 minute time frame. Most trades are not going to last more than 10 minutes most of the time.
Awesome.
But they don't pop up that many times during the day. So maybe 3-4 times during the day. They don't show up that many times. So sometimes I have to literally be staring at my screen for a long time. But when they come, they end up paying. So it's worth it.
Awesome.
I wanted to get into some Delta stuff. If you wanted to know
yeah. Let's do it. This
Sure.
is what I was.
Okay.
Yeah.
Basically, how I interpret Delta is red means it was and that was an order that was executed on the bid. And blue means that is an order that was executed on the ask. Okay. When an order is executed on the bid, it either means one of two things. It means someone sold market or someone had a bid there. Well, both things actually happened, right? Someone had a bid and someone sold into the bid. But when we're coming into an area of support and we see there's people bidding there, then that's usually a good sign, right? Because let's say you are coming down into support area and you don't want to chase, you're just going to put your limits and you're going to wait. Sellers can try to sell it as much as they want, so they're going to keep spamming market sell, market sell, market sell. But there's so many limit orders that they're not able to break below. So this is what I call passive buying, because you're either a passive buyer or you're an aggressive buyer. If you're an aggressive buyer, you're buying the ask. If you're an aggressive buyer, you're buying the ask. If you're a passive buyer, you're buying the bid. Where if you're buying the bid, you just put your offer and you just wait to get filled, right? So this is another example of a support reclaim, right? Where we have a reclaim and we just see a bunch of lower wicks in the area, and then we see people bidding in the area, and that's usually a really good sign, because every time someone wants to market sell, there's someone waiting there to buy. And how can we know that someone waiting there to buy? By all the upper wicks that we see down here. So we're seeing wicks every time it goes down, boom, it gets bought right back up. And then we could tell that there's lots of orders being executed there. Eventually what happens is, sellers basically run out of orders to sell and kind of market reverses.
In that sense, then, when we reach that area, we kind of want like the red numbers at the bottom, so the
Yes.
bid? Is it the
Yeah,
bid?
exactly. Yeah,
We want
exactly. So
those to get lower and then price will go up.
yeah, so when we're meeting an area of big support, for example, you see how all of a sudden we start seeing bigger red numbers because that's where usually this is an opening range high, by the way. So that means we broke out and we're retesting the area. So not only is it a support reclaim, we've tested this area like 5, 6 times, and you could tell that there's a lot of orders down in this area where every time it comes down here, we bounce up. Every time we come down here, we bounce up. Then we see that there's lots of orders in the area on the bid. So there's people actively waiting. Not technically people, but I'm just using it for like simpler
Yeah,
explaining.
yeah, yeah.
There's people out there waiting. They just keep putting their orders in at 24,000. So every time it comes down here, it fills their orders and market goes back up. Basically, we just run out of selling is what happens. And that's called selling exhaustion, where the sellers get exhausted and we see a bunch of the buys executed on the bid. No more sellers, market just obviously goes right back up. And then you could obviously tell near the resistance as well, where it keeps pausing down here. There's
Yeah.
lots of people selling on the ask. So that's where the bigger blue number comes in. Almost 1,000 lots executed at this 28, where every time it comes down here, people are just putting in their orders and they're selling. So every time it comes down here, people have their orders. There's so many sell orders, buyers are not able to get above, price comes back down. There's so many sell orders, price comes back up. It's not able to eat all the sell orders, price comes all the way back down. Until basically one side gives up and there's more pressure on either side and it ends up exploding.
So I know obviously you say you don't like using the word confirmation, so to speak, right?
Yeah,
So oh
yeah,
yeah,
yeah.
so I think this screenshot's about to break down the question I was about to ask. So, but
Yeah.
essentially, like when you do get to this zone, like are you using this as like more of just like you're seeing the orders at the zone and like that just gives you more confidence in like the break and retest setup, or are you actually
Yeah,
waiting
exactly.
for a switch on the bid and the ask and like absorption to happen before you get in?
Yeah, no. So I wouldn't specifically be waiting for this to show up. So if I like it based on the chart and there's wicks, I will take it regardless. But then sometimes where you just need that little bit extra confidence where you're like, okay, wait, I'm not super confident in this, I'm gonna skip the setup. But then you see this and you're like, wait, no, it's actually happening. Like I'm not delusional, right? And then that's where you kind of take it. So for example, it may not be clear to me here that this is like a break and retest or something, or that this is trying to go up. We went over the opening range high, we came back down, we held the opening range mid. I'm not too sure if it's going to hold it or not. But then we see some absorption down here, and this is really quick into the open. We see a bunch of, basically buyers stepping out, and at this point, I'm like, okay, wait. There is buying stepping in here because we held this last time. We had a big impulsive candle, so we know there was a big buy here, right? And also a big buyer off the open at the same exact area around 21,850. And maybe I'm not too sure about it down here just because it's not spending enough time. That was my main concern, is that it's not spending enough time down in this area. So I'm not able for sure to tell whether it's going to hold that area. But then I see a bunch of buying down here happens, and I'm like, okay, wait, yeah, there is passive buyers down here, and it's wicking down an area. I'm going to take it and aim for the opening range high and the breakout above. So it's
Yeah.
kind of it gives you that little extra confidence that you sometimes need. Sometimes you just look at a chart, you're like, I think I know where it's gonna go, but I'm not sure. And then I see this, I'm like, I'm for
Yeah,
sure,
that's it.
not for sure, but like now you just have that little bit more extra confidence for where you could put on the trade itself. Many people are scared to put on risk. They're scared to put on the trade. They're scared of losing. But then sometimes when you just need that little bit of extra thing to tell you, hey, this has a good chance of winning, or this is what's happening, and you have verifiable data right in front of you that shows you what's happening. And then that's kind of when it just gives you that little bit of extra confidence boost.
And with this as well, I know obviously you spoke briefly about your risk plan, but like say for example, you were to see this happen, would that almost like make you want to put on more size, or does that not change your opinion? Like, do you risk
It,
dynamically or static?
yeah. So I usually have static risk. I usually risk about the same points per trade. Um, but sometimes if I'm extremely confident in it, I will take it, and then if I think it's gonna make like a full reversal to the upside, for example, then I may add more. Like for example, if I added a little bit here and I think it must hold the opening range mid and I see buying again, then I may add a few extra contracts here again, right? But I'm not going to like double or triple my size. I may add a little bit more just because it's a good setup, but
Mm-hmm.
I'm not going to like fully double my size. But most of the time, my size is dynamic. But if I'm extremely confident in something, or ES is also aligning, bullish structure, this is a dip, I see passive buying, I may add 30% more size, 20% more size, but nothing too dramatic where I'm going to double or triple my risk. That's kind of off the table.
Okay, that's awesome. That makes a lot of sense, actually.
And then we have, for example, another example here, right? We come down in this area, we keep holding this, 780 to 790, right? And then all of a sudden, what do you see? We see lots of passive buying down here, lots of bidders. So every time we come down here, we basically get bought. Every time we come down here, we basically get bought. There's no more selling, market reverses back, to the resistance area. And we also know, then this is kind of where it gives you a little bit of confidence. We have this area, it's a lot of support. We have passive buying, and it was the previous day low. So you kind of combine all these pieces together, and you just get a pretty good trade on. It's not always you're gonna have so many aligning confluences where it's gonna be a big zone. You're gonna have the delta. It's gonna be a good pivot at the previous day low. Not always you're gonna have that, but when you have that, then that's when you can add a little bit more size. You're like, oh wait, this has a bigger chance of being a bottom, for example, than this trade, right? This trade's a little bit more riskier because it's off the open. But then when you see a trade like this where it's held that area for maybe 2 3 hours and it's at the previous day low, PD low right here, then
Yeah.
you have that little bit more confidence of like, if this is bottom right here, this is gonna end up paying me a lot more, for example, than that trade up here or that trade up here. Same thing up here where we're bouncing, we make like a triple bottom down here. We see a lot more red. And it's also at the opening range mid. So if you notice, opening range mid is kind of like a good pivot. Same thing here. The opening range mid. Um, Opening range mid right here. We see lots of more red clusters, and it keeps wicking down in the area.
Yeah.
And so you just take it, and it ends up reversing. But fun fact, you also see near the opening range high where we used to reject, you also see a big cluster of blue. But since we're going for the reversal, we kind of brush that over. We just know that there's sellers here, but we're betting on the fact that buying will eventually be stronger because we know sellers couldn't break it down. So
And
that's kind of the ideology there.
just a quick question, obviously, about your opening range, because I know
Yeah,
I've spoken to quite a few people in the past and people
sure,
kind of mark them up differently. How do you
sure.
personally mark that?
That's a 5 minute opening range.
Okay,
So
awesome.
it's
Yeah.
the first 5 minutes of the day. It takes the high, the low, and then it plots the mid between the first 5 minute bar, basically.
And how do you what's your opinion on people that say like the 15-minute is the opening range or
Everyone has different opening ranges. So some people I know use the 30 second. Some people I know use the 1 minute. Some people use the 1 hour, the initial balance. And I feel like they all have different purposes, right? For example, the 1 hour kind of tells you how big the range is going to be. So if it's a really small 1 hour range, there's a bigger chance that the range of the day is going to be smaller because the first hour is usually really volatile. But if we're not volatile in the first hour, then it's likely that the day's range is going to be a bit smaller. 30 second, I don't know why. It's a thing people used to use and they still use it. I don't know. For me, what I found to be the smoothest area where it's a blend of a volatile but not too volatile, and was the 5 minute. That was just
Mhm.
kind of what I found success with.
Yeah,
I
awesome.
have the 10 minute plotted up, but I don't pay much attention to it. But sometimes the 5 minute and the 10 minute are really close together.
Yeah.
And one last example, for example, where we see bottoming here, we see a bigger red cluster down at the bottom. We see a bunch of lower wicks here. You see it's trying to bounce in here, it's trying to bounce right here. We draw a little support box with the cluster. You take it long with a stop at the low, and then you target next resistance, and it ends up, kind of going. It's not always going to work, but 60% of the time it works every time. So.
Do you do anything to manage those positions? So, for example, in that trade there, would you ever move your stop loss to break even, or would you trail it up, or is it just
Yeah,
kind
yeah.
of you set the position and let it go?
Sure, great question. So most of the time, I let my positions be. Once I enter, I put my target, my stop. I'm off the trade, and the main reason why I switched to not being touching the trade is back then, basically when I was unprofitable or undisciplined, I would get in a trade, I'd see a little bit of profit, and I would take it because I was scared to lose. I couldn't accept the fact that I could take a loss in a trade. I would get in, I'd be up $100, and be like, oh my god, but my stop loss is 300. What if it goes back to my stop? No, just let me cash it. Let me take profits. And what that ended up doing is I end up winning on $100 and I end up losing on 300, 400. Because when you lose really quickly. You don't even have time to react. But when you
Yeah.
win, I'd win on $100. So I ended up not being profitable. I was like, wait, I need to stop doing this. Once I'm in the trade, and that just came with basic backtesting and journaling, right? Where I'd plot my entries and exits, and I'd see where I exited, and I'd see where I was supposed to exit, where I planned to exit. And I realized that, hey, if I just let my positions trade for the way they're supposed to trade and not touch them, that my results were way different. And that's just kind of how I adapted. So once I'm in a trade, I usually most of the time don't touch it. Like many times, well, I'll be up 20 points, 25 points. And if I'm aiming for 60, 70, it'll come back from my stop loss and I'll get stopped, right? But
Yeah.
the only time I'll move my stop to break even is when I don't want to be back in the trade. So for example, this trade holds this area, it goes all the way up here, for example, and it rejects and it's getting slammed back down really quickly, like a bunch of these candles. I don't want to be back in it. The only reason why I was in this trade in the first place because it was wicking down here with a bunch of delta absorption with a bunch of lower wicks, whatever. It looked good at that time. At that specific time, it looked good. But if it goes up here, for example, to 995 and it comes slamming back down, I don't want it anymore. Like that's the
Yeah.
only time I'll move my stop to break even is when I don't want to be in the position anymore. Like if it comes back down, I wouldn't. If I wasn't in the position, I wouldn't take it. That's the time I'd move it to break even.
Yeah. Okay. That makes a lot of sense. Thank you for that.
Yeah, of course. So we talked about the buying. We didn't talk about the selling. So lots of times we also take the retest, right? Where I mentioned where if it starts going up, we stall and we end up going down. We see a big flush. We see it struggling near here. So resistance, 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 resistance. And what do we see up here? We see a much bigger cluster of absorption on the ask side. So what's basically happening here on behind the scenes, lots of people are selling on the ask. There's lots of orders. So every time the price starts to move up, there's a seller waiting. There's a seller waiting. Every time price moves up, there's a seller waiting. And you can tell there's almost 1,000 to 1,500 contracts excess sold on the ask. So you basically try to take a share, and then you also, without even looking at it, it's already a resistance zone. So we see it struggling. So that's kind of the extra confirmation you need to tell you that hey, this may not be reversing all the way back to the upside. And you take it with like a stop, for example, right above 100, so you're risking maybe 15 points, not even. Then you target somewhere near previous support, or maybe all the way a reversal back to lows. Funny thing, you also, where it bounced last time, you also notice a cluster here where it tried to wick. You see that same cluster
Yeah.
here,
Yeah.
but we typically would ignore that because we know the structure here is kind of on the sell side structure. We're coming down from a big sell. We struggled to break higher, so our bias kind of here, our bias is bearish. So we kind of won't pay attention to any minuscule buying. It's kind of the bias here is kind of to sell.
So see where obviously you've circled, and then obviously
Yes,
we have the first move down before then we
yes,
end up coming back up. Like
yes.
roughly whereabouts on average are you like kind of entering into that? Like do you ever end
Yeah,
up like kind of chasing and then coming in that move down, then it comes back up and you go back into drawdown, that type of thing?
yeah, good question. No, I only trade at my area, so that's kind of I have like 4 rules in my trading, and the first rule I have is I only interact at big areas. I don't interact anywhere in the middle. One of my core principles is if you trade in the middle, most of the time you will die. That's kind
Yeah.
of how it is. Like if you're entering here, so you're in profit, you're in loss, you're in profit, you're in loss. I only interact at big areas, and here's the reason why I only interact at big areas. Interacting at big areas shows that there's urgency to get in. You will know whether you're right or wrong really quickly. That's the only time I want to be in a trade. I don't want to be sitting here for 20 minutes wondering whether I'll be right or wrong, because then your mind starts playing games. Right? Your mind starts, am I right? Am I wrong? Wait, is this going up? Is this going down? Your mind starts freaking out. But if you enter here and the chart starts working right away, it starts jumping, it comes back and it fails, you know you're right. Like you
Yeah.
automatically know you're right, whatever. There's no time for hesitation. So I only interact at key areas because I quickly know whether I'm right or wrong, and that's when the biggest moves happen with very little drawdown. For example, if I enter, somewhere at this upper wick here, I may be looking at 10 points of drawdown, and then when it ends up working, you're looking at 50 to 100 plus points. I'm not saying we're going to capture 50 to 100 plus points, but the main important part for me is when I want to be right, I want to be right away. I don't
Yeah.
want to enter a trade and just be sitting there wondering, when
Yeah.
is this going to move to me, whatever. Because if you want to enter at imbalances is what I'm basically trying to say, where price is unfair, where you need to get in, you need to get in now, and then when price reverses, you automatically know you're either right or you're wrong. That's kind of how I also keep my losers small, because if you enter somewhere in the middle, you need wider stops. But if you enter on the edges, down here, up here, you're gonna have naturally tight stops because you're either right away or you're wrong. There's no in
Yeah.
between.
Yeah.
So that's kind of how same thing here, for example, at the edges. And I use Gandalf all the time. You shall not pass. This is kind of a saying what people are, knowing me for. You shall not pass. But we see resistance, resistance. We see a big drop. It comes back a test. We see a cluster, the positive delta cluster again. So every time we go up here, there's basically sellers waiting. And I basically take it with a stop at the high and you target next support down. That's kind of always the idea. Same thing
Yeah.
here, right? It's always big zone, bunch of wicks to the upside, cluster. We see a big blue cluster down here. You take a
Yeah.
short, stop right above, and you aim at the next support lower. It's very simple, but it takes a while to get used to, especially if you're coming from like an ICT background, for example, where you have no idea what these orders mean.
Yeah, I think I'm starting to get it already, to be fair. So
Yeah, yeah,
yeah,
yeah.
great explanation. Yeah.
Thank you. Yeah.
Let's say like if you were at that zone, for example, and there's that big sort of blue cluster at the top, like what defines, like what's the limit between like a big cluster and like a not cluster? Do you know what I mean? Because
Yeah,
there
yeah,
is
yeah.
like that
Great question. Yeah,
line.
yeah. Yeah, yeah, great question. So for NQ, if I'm watching specifically for, because each instrument has different liquidity. So for example, for ES, it's gonna be way more because the orders are way more. For NQ, the book is way thinner. So anything over 500 to 700 on one side is usually going to identify to me that, hey, there's a big participant in there, there's a big trader in this area that's interested. Anything 100 to 200 is not really that relevant, like 50, 30, whatever. That's not relevant. Like you could slap 30 right now and you'd have 30. That's not really going to move the market. The thing that stops the market is a few thousand or a few hundred, like 500, 600, 700. So you see here, for example, 300, 200, 200, 100. That's like almost 1,000 right here. We go
Yeah.
down here. This is kind of a small. It barely spent any time in the area, right? And this was barely reset, but there's almost 300 lots in that little area, maybe, and it spent 3 minutes there. So in the span of 3, 4, 5 minutes, there's an excess of 400 lots executed at the area on the ask. So for example, look right here, 450, 230, 250, 120. In just that little area here, there was maybe about 700, 800 lots
Yeah.
extra. So that's kind of the threshold I would use. It's 500 to 700 plus is when kind of things start getting important. Anything under, it's just a two-way auction. It's just market. It's just the
Yeah.
market moving up and down.
So like say for example, would you recommend using this over like say a tool like Bookmap where instead of like looking at the specific numbers, you look at the density of color of the zone?
Yeah. Bookmap is a pretty sensitive subject for a lot of people, actually. So I personally do not favor Bookmap. But what Bookmap basically does is it shows these orders as a bubble. That's
Yeah.
basically all it does.
Yeah.
But the problem with Bookmap is that sometimes it'll show lots of freaking bubbles all over your screen, and then you end up getting confused whether, oh my God, is there lots of buyers or lots of selling? And the main thing that people will switch this up between the bubbles and the numbers, for example, is that on the way down here, for the market to move down, you obviously need aggressive selling. Aggressive selling happens on the bid, so it's red numbers, right? Because red numbers equal aggressive selling and passive buying. But
Hmm.
we care about it. We care about red numbers if we're trying to, to go long, for example, right? But here's where, Bookmap kind of gets some people confused, in my opinion, right? If we get a flush like this, there's going to be red bubbles all over this, and some people may think that there's buying under the hood, and they start buying, and all of a sudden they don't, before they realize it, they're buying a massive knife that they have no idea what they're buying. They're just buying
Yeah.
because they see red bubbles, and they think red bubbles means buying. And if they, for example, if they see, a bunch of blues, they might start shorting because they think they're sellers, and little do they know they're shorting a massive breakout.
Yeah.
Or they'll get it confused and they'll be like, oh wait, there's an aggressive seller, and then they'll start chasing momentum. And
Mhm.
sometimes when you chase momentum, you'll end up shorting the bottom because all those people were selling into the bid. So all of a sudden you're like, okay, wait, it's gonna go much lower. You end up selling, and all of a sudden you find yourself short the bottom, or you bought the top. Because like
Yeah. Worst
that's
case.
yeah, exactly. So, and sometimes it may work out, right? You see a big red bubble here, you short, and it ends up working out, whatever. And sure, but in my opinion, I don't find it sustainable. If you know how to use it with market structure, if you can combine Bookmap with market structure, then absolutely you could be successful because it's the same idea. But the way it portrays the idea of aggressive selling and aggressive buying, that's where I think lots of people are unsuccessful by using it versus a delta profile where it's a lot easier where you could spot, you see a cluster here, you see it bouncing here, it's a lot easier to visualize versus red bubbles over your entire screen every time it drops, a freaking penny.
Yeah, it makes a lot of
Uh,
sense.
yeah.
You briefly mentioned earlier, like you have learned certain things via like journaling and things like that. So, like for someone, for example, who's trying to learn your strategy, like what are some good questions that they should be asking themselves when they're reviewing their data?
Where are you trading? How big are your stops? How big are your targets? And what is your setup? Is it repeatable? So all my setups are basically repeatable. It's always we have the same area. It forms a delta cluster at the bottom. You take it with a stop at the bottom. You aim for the next area. The main question you want to ask yourself is how are you coming up with your trade thesis?
Hmm.
Is it repeatable? Are you just trading the market based on how you feel? Are you trading the market based, is there any consistency to what you do? Is the main question I kind of want you to ask yourself. Um, can you do this on a day-to-day basis? Whether can you stop yourself from, taking random trades just because your system is not available? How are you coming up with your entries? How are you coming up with your targets? What is kind of your risk management during the trade? When do you stop to break even? When do you start trailing? When do you cut it early, perhaps? Because, for example, sometimes if I'm targeting, maybe this down here, and I don't think it could go any higher, I'm just going to cut it early, and it ends up going my way, right? So do you have a system of when perhaps you're going to cut your trade, even if it doesn't move to your target? And the main two things are, where are you trading? So location wise, why are you trading where you're trading? Are you trading here because of it's a momentum shift? If that's your strategy, sure, right? Or are you trading here because that's where it bounced? It was a previous resistance, it became support, and that's where you're trading.
Hmm.
Or just like, you need to have a set criteria of how you're coming up with your entries and your exits. Lots of people forget about the exits, and I find that it's very important. Or lots of people prioritize, exits and forget about the entry. You kind of need to have a process for your entry and your exit.
When you're obviously coming into the day and you're doing, like, say, for example, your pre-market, and you're looking at the chart, like, do
Yeah.
you build it out in terms of, like, there's if then statements? So if this happens here, then this. If this
Yes.
happens here, then this.
Yes, absolutely. So if I'm looking at the market, for example, let's say we did not know any of this happened, I will be looking at this and be like, okay, if the market breaks under 840 and it does not hold and does not go back up, I will look to short the 840 here to go lower, maybe to the next 800 or to the next support level. And if the market breaks over, for example, 990 or for example 950, I will look for a retest back to this area so I could take it long back to the next area. The if scenarios are basically just retests. If we break over this high, I will look to take it long. If we break over this, low, I will look for a retest to take it low. The only scenario where I won't do that is if the market is balancing. And what I mean by balancing is if the market is moving basically in zigzag, up, down, and it's stuck between two different prices. It's stuck between, 21 and 25. Where if it's stuck between 21 and 25, I will just simply look to trade 21 and 25 until one side breaks, and that's when I'll trade the retest of the side that breaks. So if it breaks to the upside, then I'll look to take the retest, and if it breaks to the downside, then I'll just look to take the retest of that. The only small example where I won't look to take the retest if it's, for example, like this, where zigzagging, we fail really quickly, and we see that this breakout was not real. It was basically like a fake out, right? Then
Hmm.
I'll look to take the retest of it and go back to the zigzag instead of taking this retest back up, since it came back down really aggressively. I'm not looking to take it long. I'll basically be looking, to take it short, just because I know that we're not able to go higher. So that's the only time where I won't trade the zigzag, up down is when I know one side is wrong. I'll just try to lean more on that side instead of trading both sides.
How do you know during the day, like, when enough is enough? Like, do you have a time set period where you just get off, or like, do
Yeah.
you have like a technical reason you're like, nah, this isn't it?
Yeah, great question. Usually, I will not trade the first 30 minutes. I found that most of my biggest losses come from the not just my biggest as well. My most consistent losses come from the first 30 to 45 minutes, and that's because the market hasn't found structure yet. The market may be moving, up, down, up, down. I found that my most consistent winners are when the market has already developed levels I could trade off of. So, for example, maybe off the open it's a little bit, I don't know. So we keep going up and then we came back down. I don't know off the bat whether the market's going to go up or down. It's not clear to me yet. But for example, let's say we skip the first hour where we're starting basically from here. Now I know what the market wants to do. The market does not want to go above 715. The market does not want to go below 540. I know if it goes back to 540 to take a long. I know if it goes back to 715 to take a short. And then you could always take the long here 645 again, because support became resistance, and then it was the support retest again. You also see the delta cluster down here at the bottom as well, if you notice. I think I took this long actually and sold it here and then end up flipping, but that's kind of where I don't trade. I don't trade the first 30 to 45 minutes, and then after, usually if the range starts getting really small, then that's when I also cut off. If there's still plenty of volatility throughout the day, then I could stay on until the close. That's not a problem. But unless it's really volatile, then that's when I'll avoid. But if there's still some decent volatility and it's just ranging between two zones respectfully, then I could stay on. But I do have a daily personal, profit target where I will usually not try to cross, because like over my, 75 points of NQ on full size, that's when I usually start becoming a little bit more reckless. And I'm like,
Yeah.
okay, I have a lot of profits, time to play a little bit more aggressive, time to, ooh, this trade kind of looks good. Let me take it. I have profits. It's fine. I could take it. I can risk it. It's fine. That's when I kind of start, acting a little bit more responsible. So I noticed that, over the 75 point mark on my current size is when I start getting reckless. So if I hit 50 to 75 points trading my normal size, I usually just call it a day and walk away.
Yeah.
I found out the most consistent way to be profitable is, I feel like lots of people, many people would be taking thousands of dollars in payouts and would be successful if they just left when they're profitable. If you leave
Yeah.
when you're profitable every day, your trading will be so much different. But most people just cannot leave the setup. They're
Yeah.
green for a little bit. They keep on clicking. All of a sudden, they gave back their gains. They try to make it back. They're red. They try to make the loss back. They're in bigger red. All of a
Yeah.
sudden, they were
And
up
then it
1,000.
goes.
Now
Yeah.
they're exactly,
Yeah.
and all of a sudden they tilt. Boom, account's gone.
Yeah.
Before you know it, like, when you could have left green, you could have came back tomorrow, did the same thing again. I mean, I found for me that I don't care about big winners. I used to go for big home runs, whatever, and size up and the adrenaline rush, but I found out it doesn't matter, because
Yeah.
if you're being that aggressive, you're eventually going to give it back. I found
Yeah.
out what works best. Once I make some profit and the day is slowing down, just leave. Just call it a day, secure your paycheck, and just leave. That's what I found. Just stacking base hits every single day.
Yeah. Great advice. Great advice. If you could go back to yourself when you were in sort of your first year and you could tell yourself something from now to then, what advice would you give yourself?
Never enter a trade without your entry and your stop loss being planned. Never enter a trade without a proper thesis. And at the end of every single trading day, always journal. And what I mean by journaling is you don't just type in your P&L in a box. That's not what I mean by journaling. What I mean by journaling specifically is you type in exactly what setup it was, why'd you take the trade, why your entries and exits were there, and you have to rate the trade, whether A plus, A minus, B plus, whatever it was. And that's kind of what I mean by journaling. So if I was to give myself advice, it's control your size. So always have a sizing plan. If your account is $3,000, you can't be risking $1,000 per trade. You're eventually going to blow up. You have to have a proper sizing system. And I have a sizing, kind of calculator publicly on my Twitter where I find the average winner, the average loser, and my daily loss limit, and I just kind of calculate how many losers I could afford in a day. So have some sort of sizing protocol, right, where you're not oversizing and you're not undersizing. You can't be winning too small as well, otherwise your account won't grow. But you can't be losing too big, or you won't have an account to trade with at all, right? So you kind of have to find, some medium in the middle where you could survive long enough if you go on a losing streak, but if you do go on a winning streak, you're also building some kind of buffer on your account. Never, ever enter a trade without a proper entry and stop. So you can never enter this without knowing where you're going to exit or where you're going to stop out. Because that's
Yeah.
how you end up, if you end up shorting here and you have no idea where you're going to stop out, that's how you find yourself, doubling down right here, thinking it's going to go down. And all of a sudden, you blow up completely, up there. So never
Yeah.
enter a trade without a stop. Never enter a trade without, a proper, at least exit plan. You don't have to have a hard exit in mind, as long as you kind of know the criteria of how you're going to exit or why you're going to exit where you're going to exit. But that's a little bit more advanced. So for now, have an exit target and have an entry target, or some have an exit mechanism maybe where you're going to trail your stop, right? It doesn't have to be an exact exit target, but for 100%, you have to know where you're going to stop out. Capping your loser is how you're going to stay in the game. You need to survive until tomorrow. It's the thing you need to survive. The only way to win in this game if you come back tomorrow. Because, for example, today might be terrible, tomorrow might be great. But if you don't have an account to trade with, you can't capitalize on it. And that's the biggest mistake people just do, in my opinion.
Yaseen, I really appreciate you coming on the show and breaking down your process. Tons of absolute gems in there. If you guys are still watching this and you obviously want to keep learning from traders like Yaseen, make sure to obviously hit the subscribe button down below. And where can they find your socials, man? Where can they find out more about you and give you a follow?
Sure. I only have a Twitter account, and it's just Yaseen76. So it's YAS and then 3 E's and then 76 at the end. Yeah, I post recaps on my Twitter. I post chart setups, predictions, all that type of stuff. Thank you
Awesome.
so much
Thank
for
you so
having me.
much.
It was a pleasure, and I thank you so much again.
See you guys in a bit.